Good morning. I am Tom Boley, Chief Market Strategist here at EarningsBeats.com, and I'd like to welcome everyone to our third mini-series event, Narrowing Your Universe with a Robust Scan. These mini-series events are leading right up to the main Market Vision 2020 event scheduled for Saturday, January 4th, 2020. The idea behind these events is to allow everyone to learn more about the speakers, including their trading style and strategies. I've also had a lot of fun reading the fun facts about many of the speakers because I didn't know some of the things that they're telling us. I think it gives everybody a little bit more of a personal look into everybody as well. Early bird registration, I want to mention, is now open. So if you'd like to attend the big event on Saturday, January 4th, and take advantage of the early bird pricing, now is the time to do so. A couple of weeks ago, we had Mary Ellen McGonigal, president of MEM Research, on here to kick off our string of mini-series events, and last week it was my turn. I walked everybody through the life of an EarningsBeats.com member and how I look at the market, and today we're very fortunate to have Arthur Hill join us. I'll have Arthur join me here in just a minute, but I do want to mention that all of these events are recorded, so you as registered Market Vision 2020 newsletter subscribers can go back and listen to those recordings at your leisure. You do not need to attend any of these events live if you don't want. As long as you're a registered newsletter subscriber, you can go back and follow along with the recordings. You can always go back and look at those recordings. All right, I want to tell you a little bit about Arthur Hill. He is the Chief Technical Strategist and main author at TrendInvestorPro.com. Arthur and I have been colleagues over at Stock Charts for many years. Just tremendous amount of respect for his work. He is schooled in classical technical analysis, and using Arthur's words, he crossed over to the dark side, quantitative analysis, about 7 years ago, and he really combines the two. So he looks at classical technical analysis, quantitative analysis, and that is basically his systematic approach to analyzing, trading, and investing. I do also want to mention, if you've been over to Stock Charts and you've ever gone into the chart school, which I've done on many occasions, you have Arthur Hill to thank primarily. I know Art wrote many of the articles over there. It is an absolute encyclopedia of technical analysis. And I can say that I don't know that I've ever met anyone that has the background and the expertise in technical analysis, not to Art's level. So obviously it's very much a privilege to have him join us for Market Vision 2020 this year. Art has over 20 years of experience as an analyst, trader, investor, and educator. He is a CMT, the Chartered Market Technician that you get from the CMT Association. He's a full member there. He has worked as a senior technical analyst at StockCharts.com. He holds the CFTE designation from the International Federation of Technical Analysts, IFTA, and holds the MSTA designation from the STA, the Society of Technical Analysts, where he passed with distinction. And also, he went on to teach the momentum module for the STA diploma course. And Art, I don't even know if you're familiar with this, but you're also a VGF. You know what a VGF is?
Very good friend.
Yes.
I
didn't rehearse this. I didn't rehearse this, I swear. But yeah, Art is a very good friend. We share some commonalities. I know when we've been together before, Art's been my Starbucks partner. And
absolutely.
And we never met a beer we didn't like. So with that kind of an introduction, Art, welcome to the mini-series.
Well, Tom, I'm touched. That was a very nice introduction, especially coming from an esteemed colleague like you. It's true. We go way back through, man, remember the days at the Red Lion?
Yeah.
At the first ChartCon, I think it was.
Yep, that was 2011.
So yeah. But it's good to be here on EarningsBeat and teaming up with you and all the others for Market Vision 2020. Definitely, it's going to be a great event.
Yeah, I've been looking forward to it, and it's I guess it was a pipe dream, and then of course when we mentioned it to all of our colleagues, many of our colleagues at StockCharts.com, everybody was really excited to do it, and I think it's just a great way to bring in a bunch of folks that have a lot of technical analysis experience, but we don't all share the same view all the time, which is fine. You know, there's two sides of the market. But I think, you know, providing everybody so many distinct styles and strategies and personalities, looking at, you know, what we see going forward in 2020, I think it's going to be a really unique event, and one that I don't think anybody's going to want to miss. So I'm really excited to have you, along with the rest of the crew, joining us at EarningsBeats for this Market Vision 2020 coming up. But before we get there, you know, we do have today's event, which you have decided to join us, which I'm so glad that you did, because I know you have great information that a lot of folks will learn quite a bit of information from you today. Now, we talked about it a little bit earlier, but some folks came in here after we talked about it before the event actually started. And you mentioned that you do have a free giveaway, so I'll let you explain what you're doing there.
Sure. Our giveaway is going to be a 6-month subscription to trendinvestorpro.com. And I'll show you a little bit about the website and what it entails, so you know what you're getting. But I do plan to step up the educational side in 2020 with more videos and more back testing and more strategies, if you will.
All right, that sounds exciting, and one lucky winner is going to get it. By the way, just to let you know, the way you enter is not necessarily, well, it's not from coming into these events. The way you enter is by being a newsletter subscriber and taking the poll that Arthur provided that went out in the newsletter today. So if you know, if you go into today's newsletter or you look back at the summary, you'll be able to find that poll and be able to submit your answer, and that is what gets you registered. And then the way we've got this set up is we're going to take the poll, we're going to find out what everybody thinks, and then when we come back to do the main event back in January for Market Vision 2020, each of us speakers will answer our own poll that we provided to you. So you'll get our answer along with you know, what you all have come up with as well. So really looking forward to that. One other question, Art, before we get started, as far as questions, do you have time to take any questions at the end, or would you prefer to have those emailed to you and you can respond later? How would you like to handle that?
I will take a few questions at the end, provided they are on topic as far as this presentation is concerned. I can't do individual stocks.
Yeah, that should go without saying. It's not,
or commodities or currencies or cryptos or
exactly. We're not really set up to handle those. We'd be here all day, afternoon, and we wouldn't even let Arthur get to sleep tonight if we had.
Yeah, so let's keep it to the strategic level and the topical level.
Sounds good. Well, my friend, I'm going to let you take it away. Everybody's been waiting patiently. So what do you have for us today?
Okay, I'm going to go ahead and grab the screen, and I'm going to give you screen 1, and you should be seeing the trendinvestorpro.com chart. Is that correct, Tom?
Yep, we've got it up and running. You're good to go.
Okay, so we've got the right screen, so let's get up and running. So as Tom did mention, I'm the Chief Technical Strategist here at trendinvestorpro.com. We do market timing and trend momentum strategies. And when I sit down and I look at a chart, my most important task is to be objective when I look at that chart. And in order to increase that objectivity, I've tried to develop a systematic approach to the way I look at a chart. You know, I want something to be either or. All right, sure, there are gray areas, but you know, usually there's a line and it's either over that line or it's below that line or on the other side of that line. So even if it's 51% bullish, it's bullish. All right, it's just the way it is. And so I'm trying to make it more systematic in my approach so I can be more objective when I look at a chart and see what is really there. Now you see the link there, trendinvestorpro.com/market vision MV 2020. You can go to that link to find the scan code for this Aroon RSI scan. I probably should have done that at the end so everybody doesn't go to that now. So what we're going to talk about here is we're going to narrow the universe with a robust scan. And that's important because it can help increase your odds with every step. You know, market conditions, sector and industry, and trend are important. All right, we're going to use two indicators to do that. And we're going to find a consistent and a persistent uptrend. We're going to use the RSI range. We're going to use Aroon, or you could use price channels. And Aroon and price channels are basically the same, and I'll show you why. We're going to then do a 20-year back test using the S&P 500, and we're going to use historical constituents. So it's going to be a robust back test using Amy Broker. And this isn't like a, turncoat system that you can just start using. It's the first filter that you use to start increasing your odds when you're looking for those pullbacks, as Tom and I talked about. We're patient and we wait for that pullback and that setup. So then I'll show you the actual scan and the evaluation process. We're going to do that live off the cuff. I'm going to run the scan and look at the charts, and I'll show you where you can find the code. So let's start looking at the indicators. And the reason I chose these indicators is I've always been a huge fan of RSI. It's probably, if I had a desert island indicator, that would be it. All right. And it basically measures the magnitude of the gains relative to the magnitude of the losses. And so when the gains are bigger than the losses, RSI is above 50. When the gains are less than the losses or the declines, then the RSI is below 50. And so it has a trend bias in that regard. If it's staying above 50 on a regular basis, that's an uptrend. And if it's staying below 50 on a regular basis, that's a downtrend. So right now I don't have RSI on that. I'm going to go over to another website because they have the RSI display how I want to show it. But what I've got here is Aroon. And what Aroon does is I've got 65 days there, and I'm using RSI 65 as well. So 65 days is around 3 months. And I'm looking for a steady uptrend that's at least 3 months old. And what do I mean by consistent and persistent? Well, to be persistent, you need to be making 65-day highs. And that's what happens when Aroon hits 100. As you can see, it's done here in February, March, April, and May for NXPI. And the reason I chose NXPI is because I did write an article on NXPI with this setup that you see here in July. And it had come across my scans. And here's the article in the Don't Ignore This Chart. And I was looking at three things: the market trend. So the market was trending higher. So that puts the odds in your favor when we're in a broad market uptrend. Technology sector was in an uptrend and leading. That's another thing that puts the stock in your favor. And the industry group was in an uptrend and on the verge of a new high there in July. So you had three coattails, if you will, that were providing support for NXPI, which is a semiconductor stock. You had a strong industry group, you had a strong sector, and you had a bull market environment. And so based on that, I saw this setup here with this breakout. We're coming off of the 200-day and breaking out of a little wedge. So if we go back to the chart for NXPI and we look at Aroon, you can see it was making those new highs, those 65-day highs on a regular basis. So that tells you it's moving higher. But in order for a trend to be consistent, you cannot be moving lower. All right. And so Aroon down measures the 65-day lows. And so when Aroon down hits 100, as it did here in December, that's a 65-day low. But you can see here in May, it didn't get near its 65-day low. In July, it didn't. And it certainly didn't in August, September, October, and November. Meanwhile, you're getting 65-day highs. So the combination is what makes a consistent and a persistent uptrend. Higher highs on a regular basis, and the fact that you're not making lower lows implies you're making higher lows. So you're doing both to get that consistent uptrend. Now I want to show this I want to show the RSI example here. I'm going to just plug in NXPI here. Now on this chart, I've got 65-day RSI, and I've got Aroon, and I've got bands at 45 and 55 for RSI. So you can see here that RSI, to get a consistent and a persistent uptrend, you need to get above 55 on a regular basis, as we were doing here and here and here. And then on the pullbacks, you need to hold above 45, which is the lower line. So you have this band, 45 to 55, and this is 65-day RSI. So you can see here in July of last year, in the second half of last year, you had RSI going below 45, and you had Aroon down, hitting 100 on a regular basis. So you were clearly in a downtrend. And this is a stock you wouldn't want to be touching. And if you're running a scan using these two indicators, you wouldn't have been touching NXPI in the second half of 2018. But then come May 2019, it's coming on the scans because RSI is getting above 55. It's holding above 45. So it's in that range that tells you there's an upward bias. And then you can see the stock is just moving higher there. So this is the combination indicator that I'm using to find a consistent and a persistent uptrend. So let's look at another example. Now, of course, it's not a perfect indicator. You know, I'm showing an example that worked here, but there are examples that did not work. So let's switch back over. Here is a COOP. All right, this is an example that worked. And this was also highlighted in Don't Ignore This Chart. Now don't worry, everything I highlight doesn't go up. I've got a few that went down. All right, but you know, you had this big move up, and then you had a consolidation. It was like a flag or a small ascending triangle. It doesn't matter. It was a big surge, and it was a rest. It was the pause that refreshes. And you can see that the Aroon was hitting 100 on a regular basis. So you're making 65-day highs. Aroon down isn't even getting above 50. So you're not even making new lows. You're making higher lows. And then if we go over and look at RSI, we can see, I have to switch off this. So here we can see RSI, and it breaks above 55 here in early 2019, and it stays above 55. And the pullbacks, it barely goes below 55. That's how strong that uptrend was in Coupa. And then we started getting a little weakness. You had Aroon down hitting 65. So that would have been the time to move aside and wait for another setup. But there's the flag we saw and the breakout and the move higher. So that's basically the way it works. We're using RSI and Aroon both as a confirmation of a consistent and a persistent uptrend. All right, so moving on to the next chart example here, we got Ross Stores, and I put RSI here, and it was holding that 55-65 area. And I highlighted it here in May, and it didn't get the breakout, and it broke the 200-day, and then rallied back, and then continued to work its way higher. Now, as I said, this is certainly not foolproof. And I'm going to go back over here for the next two. Here is Twitter. And you can see that we got a bullish RSI Aroon signal here when we had that breakout, and RSI moved above 55 and Aroon hit that 100 level. And it was looking good. Twitter started deteriorating, and then you had the big gap down. So this one was a dud that did not work. But it's all about the odds. You just try to get the odds in your favor, and you try to get more trades that make money than lose money. Here is HCA Corp, And you can see that, RSI got above 55 and Aroon was hitting 100. So you're getting an uptrend and you get bullish here, and then boom, you get a gap down. That's probably earnings, and you get a bearish signal there. So, strictly as a trend following system, it probably needs some work. But as a filter, I think there is some value here to give you a list to start with when you go to work looking for a stock. So that covers those stocks that I wanted to look at. Now we're going to go over and look at a back test. And so what I did was I've got the S&P 500, and there I've got from November 29, 1999 to November 29, 2019. That's 20 years. And I coded this up in Amy Broker to run the back test. And I just bought one share, I kept the number of shares equal, or the position sizes equal and small, because I wanted to test all signals. This isn't like a portfolio level back test. All right, all I wanted to do was to know if this had any predictive value. And so I'm going to look at the results here by clicking on the table, which is probably popping up behind this window. Or I can run it again, and then I will show the table. I see it's popping up on the other screen. So here are the back test results. And all I'm looking for is to see if it has any predictive value. And you can see that 43.53% of the trades were winners. So you buy when the Aroon and the RSI trigger bullish signals, and you sell when the Aroon and the RSI trigger bearish signals. And the average gain was 19%. And typical with trend following systems, you had more losers than winners. And the average, you had 56.6% losers, but the average loss was a lot smaller. 7% was the average loss. So about 2.5 times. The gain was 2.5 times the average loss. And so that tells me there's some added value in having this scan as a starting point when I'm looking for trades and when I want to look for bullish setups. So let's go back over to stock charts, and I've got a scan. And as I said, at the end, I will show you the link where you can find this scan code. It's a relatively simple scan, but I think it's something that you can use to put the odds further in your favor. So we already know we're in a bull market. S&P is hitting new highs. It's above its 200-day. The Russell 2000 broke out and is hitting new 52-week highs. The mid-cap S&P 400 is breaking out and hitting new highs. We know healthcare and technology are leading, finance perhaps. So we kind of know some things that can help put the odds in our favor. Now we need to find some stocks. And so when I'm doing this scan, I've just got a simple code. I want the minimum value over the last 65 days of 65-day RSI to be above 45. That means RSI did not dip below 45 for 65 days. All right. And I want to make sure that it's getting above 55. So the maximum value over that 65-day period for RSI 65 is above 55. So the fact that you're not going below 45 tells you you're not going too far down. And the fact that you're going above 55 tells you that upside momentum is in progress, happening. You're making forward progress or upward progress. Same with Aroon. I want the max of the Aroon 65-day for Aroon 65 to be above 99, basically 100. So you're getting a 65-day high. And I want the max of Aroon down 65 to be below 99. I don't want to be making 65-day lows. And so that combination tells me that I'm moving higher. So if you put them together, you've got an uptrend. And I put a couple of additional things you can add if you want. 20-day simple moving average is above the 200-day. And if you want a 52-week high, you could say that the maximum, the last 255 days of Aroon up 255 is above 99. So that means that you've had a 52-week high in the last 255 days. So this is just a very simple scan designed to make it easy to find stocks in uptrends. Now, I do see the questions coming up. Somebody's asking me if weekly charts skew things. I haven't used these weekly settings. They would change things up a little bit. So I would have to test that separately to find out. And somebody's asking, what is quantitative analysis? Well, quantitative analysis is what I was doing with Amy Broker when I ran the back test, and all you saw was a bunch of numbers. And so what it does is it takes this system that I've shown here using the S&P 500, the RSI, and the Aroon, and it takes all the buy signals and all the sell signals, and it gives you the statistics. All right, and these statistics tell you whether the system is viable or not. You know, if I'd had 70% losers and 30% winners, and if I'd had an average gain of 10% and an average loss of 30%, well, it wouldn't be a viable system. So that's why I think this helps.
Hey, Art.
I haven't used it for sorry?
Art, I just had a follow-up question, if I could
Sure.
ask you on that quantitative analysis question. And that is, you know, I saw the 20 years, which that is a huge back test. So I think you get, you know, obviously a very representative sample. But did you break it down between bear markets and bull markets? Because if, and was it all longs, or did you also have shorts? How did that break down? And the reason I'm asking this question is I'm just wondering if it works better during a bull market, because obviously you're looking for persistent and consistent uptrends, which you don't get in a bear market. So was there any further breakdown that you had on those results?
Yeah, those are great questions, Tom. So I did put in a bull market filter. So the 20-day SMA for the S&P 500 had to be above the 200-day SMA. And it is a long-only strategy. And so you're only looking for long positions when you're in a bull market environment. When you're in a bear market environment, there are no trades being taken. So it's hard to see here, but you can see a flat period here in 08, 708, and that's when no trades were taken. And you can see here. Now this was just a all signals test. All right, it wasn't a test to test the viability of a portfolio. But yes, you need to be in a bull market, and it's a long only test.
Did you look at the shorts at all? I mean, did you see if it worked opposite during a bear market?
I have looked at short strategies, and they just, I've never found success with a short strategy.
Yeah, me either.
You know, the S&P 500 is above its 200-day moving average around 70% of the time over the last, whatever, 50 years. So, you know, you have 30% of the time you have a chance. And then, as you know, bear markets, the moves are brutal. The volatility is way up.
Yep. Yeah, and so is your emotions. I mean, when you get into a bear market, I mean, that's the problem I have more than anything. If I'm shorting and I time it just wrong a little bit, I mean, those bounces to the upside can be just as brutal as if you're long and, you know, you get those big moves to the downside. I mean, if you're shorting and you time it wrong, those moves back to the upside are just brutal, because you're sitting there betting against the market's going up, and I don't think there's any worse emotional position to be in than to watch a market go up and lose money. That's just me. That's just me. If I'm long and the market goes down, well, that's part of investing. But just emotionally, that's a big problem for me when when I'm trying to short and the market goes the other way and goes up, I feel like I should be making money. So it like doubles the pain.
That's true. That's true. Bear markets is a good time to like have a project, you know, to build a deck or remodel your room or something like that. Or to do or take a quantitative analysis course or, you know, study up on your strategies. That's a good time to do it.
Did
And,
you
you
say
know,
remodel your Aroon?
room.
Oh, Aroon. I thought you said Aroon. I'm kidding.
Yeah. Dun, dun.
Couldn't help it. Sorry.
Oh, so somebody's asking if you can have a watch list inserted. You sure can. You can choose one of your chart lists here, and you can add it to that scan instead of the S&P 500. So here is the scan that I have done. And out of 500 stocks, we've got 206 coming across. And what's great here is you can put these in an existing chart list. And so I'll do that. And I happen to have one called Scan Dump. I think Greg Schnell taught me that, to have a list called Scan Dump. And then you can view them at 10 per page, or you can view them in Candle Glance. And there was actually one more thing I was going to show you there with the results. Let me run that scan one more time now. So that's going to change it. And so I'm going to do a sort. So I'm going to click to do sector sort. And then I'm going to hold down the shift key and I'm going to click industry. So now I've got sector sort, and within each sector, I have an industry group sort. And that way you can view and see, you know, say you don't want consumer discretionary for some reason. You could just avoid those. All right. You can move consumer staples. That sector is strong. You could look at that sector. And you could scroll down to healthcare, because we know that the healthcare sector is very strong, to look for some setups there. So I'm going to go ahead and put this in the chart list. Now I'm going to click preserve sort order. And so that is going to keep them in that sector, industry group, sort, column sort that I just did. And that's really handy when you're going through your charts, because I like to have things ordered by sector and or industry group, so I see like with like. So let's see what we get here. We'll go to Candle Glance. It's one of my favorite ways of viewing charts. And so once you get to this level, you can immediately see which ones are maybe setting up for something you might like. I know these Candle Glances are kind of small, but you know, it's nice. Look, we got Charter, AT&T, Verizon at the top. Then we get our consumer discretionaries with Ross and TJX Company. And then we're getting into some retailers with Target. And this is still consumer discretionary. But one that kind of jumps out is, you know, Borg Warner, you know, talking about a pullback. You know, you can see kind of a resistance level turning into a support level. And you look at this advance and you can see this is like 2 steps forward and you're coming back, and that's like 1 step backward and it's starting to turn. So, you know, I would single out Borg Warner for further analysis. And this is an easy way to scroll through a whole bunch of charts in a short period of time. Best Buy is breaking out to new highs. So it's bullish, but it's not quite the setup that I'm looking for. But I know that all of these stocks are in some sort of an uptrend based on what I've done with the scan. They've all met that scan criteria. Excuse me there. Campbell Soup chugging along. So you're not going to get, you know, everything is not going to set up perfectly, but, you know, here's a bank, Fifth Third. This looks like a flag. You got a big surge and then a falling flag. So there's a bullish setup there. There's Huntington. It's already breaking out of its flag. So I'm not going to go through all 206, but you get the idea. We already know that technology, healthcare, and finance are strong sectors. So we could just narrow it down to that and move to those sectors to look for bullish setups. You know what kind of setups you're looking for. I'm usually looking for a falling wedge or a flag or something like that. So let's see, I've got a question here. Have you done your trend analysis on the 10 major sector ETFs? Yeah, I haven't done it on the sector SPDRs. I find that stocks are better for momentum strategies because to get success in momentum strategy, you need the outsized gains. And to get the outsized gains, you usually need to have individual stocks. Can you sort by 3 columns? I don't think so. I think you can only sort by 2 columns. You have to check with stock chart support. I think there was one thing I was going to explain, and that was the Aroon and the price channels, and I didn't quite get to that. Let's pick this Coupa chart. So we've got 65-day Aroon, and another way to view 65-day highs is with just price channels. So here I've got 65, and I click update. And so the top line is a 65-day high. So you can see when you start getting above that 65-day high there, Aroon is hitting 100. And then you can see down here, you're hitting that lower line. And that means, now I think the price channels might be on closing prices only. So you need to close below to get that 65-day low. So I'll go back to a view all. Can you please indicate the command to preserve the sorting? Sure, we can do that again. So let's just run that scan since it is so fast. Run scan. So I've got the sector, and so I'm going to click on that heading to sort. So now I've sorted by sector. And I'm going to hold down the shift key, and I'm going to click industry. And so we now have sector, and then within the sector, we have the industry sort. So again, hold down, click the sector, hold down the shift key for your second sort, and click industry is the way you do that. Do earnings come into play for your timing? Yeah, I usually won't take something the week of earnings. I'll usually stay away from it. And if you look here, what's nice on this site here, you can see the earnings are pictured so you know when the earnings are going to be. So this is HCA. And there you can see earnings are going to be January 30th. So you can avoid that way. So I think that is wrapping it up. That has covered most of the questions. Just to let you know, you can go to that, go to my last slide here. Thanks for tuning in. You can go to this URL, MV2020, trendinvestorpro.com, MV2020 to get that scan code. And you can copy it and you can enter it into your stock charts scan workbench to run that. So I don't think there are any more questions. I want to thank everybody for attending, and please visit trendinvestorpro.com, which I haven't even shown you. So if you're still here, here's trendinvestorpro.com. And basically I have 3 things, or 4 things if you include the free. I've got some free articles that come out, 2 or 3 per week, and they're on the main blog page. And then I've got premium. I've got the market timing model, which is on Fridays. I've got the ranking and grouping of core ETFs. I've got a core ETF list with 60 ETFs, and I group them by chart patterns and trends. And then I put those groups into different ranks so we can see which are the strongest at the top and which are the weakest at the bottom. And to give you an idea, this is the market timing report for today. We can see December has a bullish bias. And I'm looking at the weekly chart for SPY. And I'm monitoring the weekly chart for IWM, which has a big breakout. MDY has a big breakout. And then we're looking at the high-low lines, which are still rising. A lot of people are complaining about the lack of new highs. Well, that doesn't matter, because what matters is that you have more new highs than new lows. And that's definitely been the case since August for the S&P 500, since early September for the S&P Mid-Cap 400, and since the middle of October for the S&P Small Cap 600. And then I've got the sector breadth model, which is very green. It's been very green since early September. And I've got a Fed chart showing the uptick in the Fed assets and the SOMA, which is the biggest portion of the Fed assets. And then on the ranking and grouping, I highlight some ETFs that I'm watching quite closely. And there you can see the groupings, new high and leading gainers. So we got healthcare at the top with staples coming in there. And at the bottom, we've got all these downtrends. We've got energy, the alternative harvest ETF, and preferred ETF broke down this week. And we can see that weirdly, bonds and gold are kind of in the same boat with this falling wedge correction, and they haven't broken out. And so then I've got a lot of charts that I want to highlight. This is a very long report, but it comes out on Thursdays, and it can get you situated for positioning yourself on the weekend for ETFs. And then there's the Market Vision 2020 page. And you can get the code for the RSI. And one final thing you get is a chart book updated on Thursdays and Fridays with 60 plus annotated charts. And this is a PDF chart book, and they're very annotated. And that will give you some color on what's happening for all the ETFs that I cover. And the subscription is very modest. And if you do subscribe, you can get access to this chart list, which is a core list of 60 symbols. And I can give you access to a master list with 200 symbols. And they are sorted by a top-down format where you have the major index ETFs at the top. You have the sectors, the industry groups, bonds, currencies, gold, and such. So I'd invite you to come and subscribe just for that chart list. I think it would be worthwhile. So on your website, can we click on a chart in order to set it up on stock charts? Not this one, because it comes from Twitter, but say this one here, the high-low line chart. It's linked to a stock charts sharp chart. And yes, you can click on it and it will open up, and then you can save as, and you can put it where you want it, or you can do the annotate. If you annotate and then you do one little annotation, and then you click the save chart icon to the left, then you can put it where you would like in whatever chart list you would like. So yes, you can do that. Oh, somebody says, so Arthur, if earnings do factor in, how does one do a 20-year scan and still factor in earnings? Well, no, you can't really do that. Well, I guess you could, but I don't factor in earnings on my back testing. I factor in earnings on my more subjective trading is the clear answer to that. As you realize, probably in technical analysis, there's nothing is really black and white. There's always an exception to every rule. You know, somebody says, well, the market's overbought. Well, that's bullish. And somebody says the market's overbought. Well, that's bearish. It's overbought. It's overextended. So it does go both ways sometimes. And it takes a long time to study things and find out. And that's why you got to attend these events, Market Vision 2020, to see what a whole panel of experts have to say. And then you can find your own way based on taking these bits and bobs from your favorite chartist and analyst.
Excellent. That was excellent, Arthur.
So Tom's cutting me off. He's got that
No,
hook, you know.
No. If you got more, I'm here. I'm here for you. Remember, you're my VGF.
You know, Tom and I could rattle on for a long time when it comes to the markets.
Yeah, it wouldn't be that exciting though, because I watch you and I literally just agree with just about everything you come up with. So it would be very boring. It was like, yep, I agree with that, Arthur. Yep, good job, Arthur. Perfect. But it's fun sometimes when I get together with Greg Schnell, because he'll take different approaches and we have completely different looks at the way. I mean, you were just mentioning, people look at, two really good technicians who have been doing this for a long time can look at the same chart and come up with different conclusions just based on their own styles and strategies and everything. But I always have interesting conversations with Greg. My blood pressure usually goes up because, he'll talk to me about energy and gold and I'm like, what are you doing? But his strategies are a lot different, and timing and everything else is different. So it's actually pretty cool. That's why I'm looking forward to Market Vision 2020 so much, because I know pretty intimately everybody's strategies that is going to be speaking at the event. And I really admire and respect everybody's opinion. So I like to use it to bounce off, I like to think about the market in my own world and then look at what everybody else is saying and try and factor that in. What I don't do is go and factor in what they say on CNBC. That, as far as I'm concerned, has absolutely no place in trying to figure out what the market's going to do, because they're usually on the wrong side of everything.
Well, I do filter CNBC because every once in a while they're going to have on a technician.
Yes, you're right.
But you're right. It's not going to be running all day. There's no way.
Yeah.
There is no way.
Yeah, I don't think I've had CNBC on in a while. I mean, I know I haven't had it on in a while. I don't know how long it's been, but it's been a long time. I do go to CNBC.com and Bloomberg.com just for headlines and so forth, but even those can be skewed sometimes, with maybe a little bit of, I don't know, maybe a little bias in some of their articles. So I tend to take a lot of it with a grain of salt. But if I need like jobs report or something like that, I'm waiting and, I want to see the news coming out without having the TV on. Sometimes I'll go to those sites for the actual news. But
every once in a while you need to go to get some information. If you see the market's down, the Dow's down 500, you need to know why, or at least the reason they're giving.
Exactly.
Might not be the right reason.
Well, I can tell you it's trade war.
So yeah.
That seems to be the go-to. Anytime the market's down, it could go up 10 days in a row, and the first day it's down, it's a trade war.
Yeah, the S&P's at new highs. It's the trade war.
Exactly. But no, this was a great event. I think everybody got a real taste of how you look at the market, and being, I was in public accounting for 20 years and I consulted with businesses. I love to get in and analyze. And I really was in awe looking at the back test that you did on this strategy. And I cannot emphasize enough, when you were going over that and you said 43% winners, but earning 19%, 56% losers, but only losing 7%. If you all haven't done the math, that really works out well in your portfolio long-term. When you've got almost 50-50, but you're making almost 3 times more than what you're losing on losing trades, that works. And that's one thing that I talk about a lot. I don't think many traders or investors really get. It's not about being right all the time. It's about knowing when you're wrong and getting out and cutting those losses short, and then letting your winners run, which is really the strategy that you have in place there, which I think is awesome.
Yeah, that's very true. And that's, as I said, it helps set your expectations, because if you're running some sort of a trend following strategy, you're probably going to have less than 50% winners. And so you're going to have to make that up with bigger winners than losers. And I've also found out that if your stops are too tight, you're going to get whipsawed out too much. So you do have to put a bit of a buffer in there. But we could go on and on and on, couldn't we?
Yeah, I've got one last question for you, because if you get in using your system, and let's say, you know, you were looking at the candle glance and you saw one of those flag patterns. I think it was Borg Warner that you mentioned, where it had come back down close to that prior breakout level.
Yeah, it was Borg Warner.
What's that?
Yeah, it was Borg Warner.
Yeah, if you get in on a stock like that and you know it's close to price support, and you see the volume start to pick up and it breaks below that price support level, would you be inclined to sell, or would you simply wait on that mechanical sell signal?
Well, it depends. Now, this scan wasn't a strategy, but if I was running a strategy, I would wait for the mechanical sell signal.
Okay.
I would adhere to the strategy.
Okay.
Now, if I was just doing, you know, Borg Warner as a, you know, an individual trade, as something that was pulling back here, and, you know, being more subjective about it, you know, the scam was just a filter, you know, to find something that you might like. So you can see, you know, this one's setting up pretty nice, you know, with its breakout. But, you know, your stop's down all the way to 41 now. I would say below that low.
Mm-hmm.
But as far as the strategy, you know, if I was running the strategy, I would not. And that's the hardest part, is sticking with a strategy.
Yeah.
It's a very hard part to do, because you're going to go through a period when you're going to have a string of losses.
Mm-hmm. Well, and all you need is just a, you know, brief market downturn sometimes to, you know, get you stopped out of bullish momentum strategies. But I think what the 20-year back test proves is if you stick with it long term, that it's a proven system. And so that should give folks a little bit more confidence, I would think.
You have to keep taking your trades.
Yes. Yep. Yep. Well, this was phenomenal. That's kind of what I was hoping, you know, when we talked about doing these mini series events, is really allowing everybody that comes in to watch this to really get a sense of your style and your strategy, so that when we do the event in January, when we have that Market Vision 2020 event, everyone kind of knows where you're coming from. I think just about everybody realizes that you tend to be more on the bullish side, that when things are bearish, you really just want to leave the market alone. You're not really somebody who wants to short and take advantage of the huge downtrends, which I think is a good style, because if you go back and look at history, bear markets don't last nearly as long as bull markets.
True.
And
then they move a lot faster.
Yes, and they get very scary. And the sky's falling. I mean, if you listen to any media, you're going to hear that the sky's falling. I mean, we're in an uptrend, and we still hear sometimes that the sky is about to fall. But yeah, it was great, you know, getting your strategy and letting everybody check that out. I would certainly encourage everyone to check Arthur's work out over at trendinvestorpro.com. I've been following Arthur's work for a long time. Still, many times when I see your blog article, you know, you post a new blog article, I'll check it out. And many times it does kind of align with, it's similar to my strategy. And I would just encourage everyone out there to find, you know, the folks that we have that are going to be speaking. I'm sure you'll find some of the different speakers to be, you know, some will be more appealing to you, some maybe not as much, because of our approaches. And I'm not a long-term investor, so anybody who's looking for a, you know, 10-year outlook or something outside of my big picture, that's not really the way I set up my individual trades, you know, to hold over that long of a period. So, you know, I know I appeal to a different base. You're going to have a different group that you appeal to. Mary Ellen, who was on a couple weeks ago, is going to have a different group. But I think I think this event coming up is going to be great, because it gives so many different opinions from people who've been doing this for a long time.
Indeed.
All right. Well, again, thanks, Arthur. Really appreciate you stopping by and, you know, giving your time to help educate everyone on your approach, and really look forward to seeing you on Saturday, January 4th. And I do want to remind everybody again that early bird registration is open. So if you want to save money on the event, it's not really priced. I don't think it's priced that high to begin with, but you
Not
can
at
save,
all.
no, I mean, you can save another $20 by registering before the early bird registration ends. I don't know the exact date we'll close it, but it'll be sometime mid-month. So you've got some time. Check out those newsletter articles that come out Tuesdays and Fridays on the Market Vision 2020 event. Gives you a lot of good information about the speakers, the giveaways, and don't forget Arthur's agreed to give away 6 months of his service to somebody who's lucky. Make sure you go back and fill out that poll. And yeah, it was a great event, Arthur. Again, appreciate it, and hope to see you soon.
All right, Tom, have a good day. And thanks again, everybody, for tuning in.
All right. Happy trading, everybody.
All right. Bye-bye.